Sir, good morning. You told to cope with the current regime, like cross-index trades. So, if you can elaborate about it, it would be nice, sir.
So I'm also still in the process of experimenting with this, and so far, like I'm not able to find anything with like a consider that it's not, but it's not made me money, it's not lost me money. But the idea is very simple. You look for high correlation. So high correlation would be Nifty and Bank Nifty, right? And Nifty expires on Tuesday, Bank Nifty expires on Wednesday. So अगर let's say आपका view bullish है, right? So what do you do at that point? आप put बेचोगे, right? But at the same time, to hedge that put, what you can do is, let's say you have sold 1 lakh premium worth of put on at the money of Nifty, and you buy 1 lakh premium worth of at the money of Bank Nifty premium. Now if the market goes up Tuesday को ये Nifty का zero हो जाएगा, Bank Nifty का zero नहीं होगा. Right now, in terms of how do you find a balance, the things I've been working on. Okay, what kind of premium between the two makes sense? What kind of deltas? Because sometimes your deltas also can get mixed match. Because even though the instruments are highly correlated, it doesn't mean they have to move exactly. मतलब tick by tick exact move होंगे. Right, so that is the concept of a cross trade. To enter such a trade, generally speaking, if I was, let's say, taking the same trade of I'm long and I want to create this, I will wait for a divergence in IVs between Nifty and Bank Nifty, where Nifty IVs have risen, but Bank Nifty has not risen to the same corresponding extent. So if I'm tracking the spread, I'm trying to look for a divergence of that where I'm able to sell Nifty at an attractive price, while Bank Nifty I'm not buying at what I would consider an elevated price. So that kind of a setup is one. I'm just giving you an example, right? So similarly, you will find correlation between Nifty and Sensex. Once again, those two expiries are 1 day apart. Now, if they're 1 day apart, you have the potential to look for such calendar trades, and that's exactly what I have been experimenting with. And so far, like it hasn't really, like, what am I always looking for? I'm looking for, is there anything consistent here where I'm able to like scale this up by a big amount and make good money on this. But as of now, this whole regime is so new that it's not yet gotten to a point where I'm like, oh, I'm very convinced with this approach. So yeah, but that's what I mean by cross trading. That you essentially now in this regime that you have so many expiries and many instruments are correlated with like 1 day expiry and 0 day expiry being next to each other. There are opportunities between them. That's what I mean.
Thank you, sir.